Preparing for a First Abu Dhabi Bank FAB interview questions and answers interview? You've reached Candy Mentor, and this video is for you. We'll walk through 15 key questions you're likely to face. For each question, you'll see a sample answer followed by the key points to cover. Subscribe, like, and share. And drop a topic request in the comments. Question 1. Why do you want to work at First Abu Dhabi Bank? FAB appeals to me because it combines scale, regional influence, and transformation. It is the UAE's largest bank, with strong corporate, investment banking, retail, and treasury platforms, so the learning curve is broad. I also like that FAB is closely linked to trade, capital markets, and government-related growth across the region. I would bring strong analytical discipline, client focus, and ownership, while learning how a leading Gulf bank manages growth and risk. While answering, focus on FAB's scale in the UAE, diversified banking platform, regional growth, risk culture, and why the role aligns with your skills, not just brand prestige or location. Question 2. How would you describe FAB's business model? FAB's model is diversified rather than single product. It earns net interest income from lending and deposits, fee income from payments, trade finance, cards, asset management, and investment banking, plus treasury and markets revenue. On the balance sheet, deposit franchise quality and disciplined lending drive profitability. Strategically, the bank benefits from UAE trade flows, sovereign-linked activity, regional corporates, and digital adoption, but it must manage credit concentration, liquidity, and regulatory capital carefully. Make sure to cover FAB's main revenue streams, balance sheet drivers, client segments, and strategic exposure to UAE and regional trade, capital markets, payments, lending, treasury, and digital banking. Question 3. How would you assess the credit risk of a corporate borrower? I start with repayment capacity, not collateral. For a corporate borrower, I analyze business model, industry position, cash flow stability, leverage, interest coverage, working capital cycle, and management quality. Then I stress test assumptions, lower revenue, higher rates, delayed receivables, or currency pressure. Collateral and guarantees matter, but they are secondary protection. A strong credit memo should clearly connect risks, mitigants, covenants, pricing, and whether the facility structure matches the borrower's cash conversion cycle. In your answer, talk about repayment capacity, cash flow, leverage, industry risk, management quality, collateral, covenants, and downside scenarios. Show that lending decisions start with cash generation, not security. Question 4. How do rising interest rates affect a bank like FAB? When rates rise, a bank can benefit if asset yields reprice faster than deposit costs. FAB's net interest margin would depend on loan mix, fixed versus floating exposure, deposit beta, and competition for funding. Higher rates may lift income initially, but they can also pressure borrowers and increase defaults. I would look at sensitivity disclosures, CASA levels, wholesale funding reliance, and hedging. The key is balancing margin expansion with asset quality and liquidity risk. Be sure to mention net interest margin, asset repricing, deposit beta, funding costs, borrower affordability, credit quality, liquidity, and hedging. Avoid saying higher rates are automatically positive. Question 5. Can you explain International Financial Reporting Standards 9 expected credit losses and why they matter for a bank? International Financial Reporting Standards 9 uses an expected credit loss model, so provisions are recognized before an actual default occurs. Stage 1 covers performing assets with 12-month ECL. Stage 2 covers significant credit deterioration with lifetime ECL, and Stage 3 covers impaired assets. For FAB, this matters because provisioning affects profit, capital, and portfolio decisions. A good analyst watches migration between stages, macroeconomic overlays, collateral values, and whether coverage ratios are prudent. While answering, focus on the 3-stage impairment model, forward-looking provisions, significant increase in credit risk, macro overlays, impact on profitability, capital, and management's judgment in provisioning. Question 6. What capital adequacy metrics would you monitor for a bank? Capital adequacy shows whether the bank has enough loss-absorbing capital relative to risk-weighted assets. Under Basel rules, I would focus on CET1, Tier 1, total capital, leverage, LCR, and NSFR. For a bank like FAB, strong capital supports lending growth, market confidence, ratings, and dividend capacity. But excess capital also has an opportunity cost. The best answer is not just the ratio, it is the link between risk appetite, growth, and resilience. Make sure to cover CET1, Tier 1, total capital ratio, risk-weighted assets, leverage ratio, liquidity coverage ratio, and why capital strength supports growth, confidence, ratings, and resilience. Question 7. What would you do if a large corporate client started showing signs of financial stress? If a large borrower shows stress, I would first separate temporary liquidity pressure from structural credit weakness. I would review updated cash flows, covenant breaches, arrears, collateral, sponsor support, and sector outlook. Then I would consider restructuring, additional security, tighter monitoring, or downgrade and provisioning. The priority is early action. Waiting usually destroys recovery value. For a bank, disciplined NPL management protects earnings, capital, and relationship credibility. In your answer, talk about early warning indicators, cash flow review, covenant breaches, collateral reassessment, restructuring options, downgrades, provisioning, stakeholder communication, and protecting recovery value. Question 8. How do AML and KYC requirements affect day-to-day banking work? AML and KYC protect the bank from financial crime, sanctions breaches, and reputational damage. In practice, I would verify customer identity, beneficial ownership, source of funds, expected transaction behavior, and sanctions exposure. For higher-risk clients, enhanced due diligence is required. I would also monitor unusual activity, escalate red flags, and document decisions clearly. At FAB scale, strong controls are not box-ticking. They are essential to trust and regulatory standing. Be sure to mention customer due diligence, beneficial ownership, source of funds, sanctions screening, transaction monitoring, enhanced due diligence, escalation, documentation, and protecting the bank's license and reputation. Question 9. If you were preparing for a meeting with a corporate client, how would you approach it? I would prepare by understanding the client's sector, ownership, financial performance, borrowing needs, transaction flows, and strategic plans. The goal is to identify where FAB can add value, not just sell a product. For example, a trading company may need working capital, letters of credit, FX hedging, and cash management. I would ask focused questions, assess risk early, and coordinate internally so the client receives a complete, compliant solution. While answering, focus on researching the client, understanding financial needs, identifying cross-sell opportunities, assessing risk, asking useful questions, and coordinating with product, credit, compliance, and operations teams. Question 10. How would changes in the UAE economy impact FAB's performance? The UAE economy affects FAB through credit demand, deposit growth, asset quality, and capital markets activity. Higher oil revenues can improve government spending, liquidity, and corporate confidence, but FAB is also exposed to real estate, trade, tourism, and rates. I would watch GDP growth, PMI, property prices, inflation, fiscal spending, and regional geopolitics. A good bank analyst links macro trends to loan growth, provisions, funding costs, and fee income. Make sure to connect macro indicators to banking outcomes. Loan growth, deposits, asset quality, provisions, capital markets activity, real estate exposure, trade flows, oil-linked liquidity, rates, and confidence. Question 11. What is CASA, and why is it important for a commercial bank? CASA stands for Current Account and Savings Account Deposits. It matters because these balances are typically cheaper and more stable than wholesale funding or term deposits. A higher CASA mix can support better margins and liquidity, especially when rates are volatile. For FAB, a strong transaction banking and salary account franchise can deepen customer relationships. I would not just quote CASA. I would ask whether deposits are granular, operating, and behaviorally stable. In your answer, talk about current and savings account deposits, low-cost funding, margin support, customer stickiness, liquidity stability, transaction banking, and the difference between headline balances and quality deposits. Question 12. What is asset-liability management in a bank? Asset-liability management is about matching the bank's balance sheet risks, especially interest rate, liquidity, and maturity mismatches. If long-term loans are funded by short-term deposits, the bank must manage refinancing and repricing risk. Treasury may use liquidity buffers, transfer pricing, duration limits, and hedges. At FAB, ALM is critical because the bank operates across currencies, client segments, and markets. Good ALM protects earnings while ensuring the bank can meet obligations under stress. Be sure to mention maturity mismatch, liquidity risk, interest rate risk, currency exposure, funding structure, transfer pricing, hedging, stress testing, and why Treasury plays a central role. Question 13. How does digital banking change the competitive position of a bank like FAB? Digital banking is important because customers expect faster onboarding, payments, servicing, and data-driven personalization. For FAB, digitization can reduce cost to income, improve customer experience, and create better cross-sell opportunities. But execution must be controlled. Cybersecurity, data privacy, operational resilience, and regulatory compliance are non-negotiable. I would evaluate digital success through adoption, active usage, error rates, processing time, fraud losses, and whether technology actually improves profitability and retention. While answering, focus on customer experience, faster onboarding, automation, cost-to-income improvement, data analytics, cybersecurity, operational resilience, regulatory compliance, and measuring whether digital investment creates real business value. Question 14. Tell me about a time you had to deliver accurate work under a tight deadline. In a deadline-driven situation, I stay structured. I clarify the decision needed, split the work into must-have and nice-to-have items, and communicate trade-offs early. For example, if a credit pack is due, I would prioritize financial spreads, key risks, mitigants, and covenant analysis before formatting. I also keep stakeholders updated rather than surprising them late. That approach helps deliver accurate work under pressure, without weakening control or judgment. Make sure to structure your answer with situation, task, action, and result. Emphasize prioritization, communication, quality control, stakeholder management, and how you protected accuracy despite time pressure. Question 15. Why should FAB hire you? I would bring a combination of technical discipline, commercial awareness, and ownership. Banking requires accuracy, but it also requires judgment, understanding clients, risk, regulation, and how products generate value. I am comfortable analyzing financial statements, asking practical questions, and communicating clearly with different stakeholders. FAB's platform is large and fast-moving, so I would focus on being reliable quickly, learning the bank's standards, and contributing to both client outcomes and risk control. In your answer, connect your technical skills, banking interest, work ethic, communication style, risk awareness, and client mindset to FAB's scale, standards, and need for reliable execution. If you are still with us, congratulations, you are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.